Hubert, let's come in from an African investor group perspective. Deal making across the African continent is something you spend a lot of time doing. The trends that you are deploying.
Well, I think one of the most important things, first of all, is to recognize that the continent has got a long history of governments to DFIs and governments to donors. And our client base and our partner network is predominantly pension and institutional investors and insurance companies who are really just trying to diversify and get access to opportunities on the continent. But with that comes access to large pools of capital, but the risk is very thin and very tight, and the levels of governance that they expect and the types of opportunities that they can access are very, very limited. And of course, they're very clued in terms of the global media outlook, in terms of all of the headwinds that we know the continent continues to get caught up in because of the global economic trends. So it's really important to understand when you're engaging institutional investors, it's a very different conversation than when you're engaging sort of concessional capital, development finance institutions, and the other. But that being said, we're seeing a number of different types of models that are coming to market, and there's a real sort of flight to quality. In other words, these institutions are really trying to figure out a way to concentrate their access to the opportunities so that they can actually look at them as financial risks as opposed to project risks. So they really want to go in behind very specific platforms where they may say, okay, we want to get access to, let's say, the oil and gas sector in West Africa. We're going to allocate some capital to do that. Do we need to go in through 5 different investments with 5 different companies? No, they're saying rather, let's back one big player that's very credible. Let's use that company to actually integrate our own strategy and get access to that sector and get access to that geography. And we're seeing that in education, healthcare, oil and gas. So it's a platform strategy that seems to be manifesting itself. We're also seeing something similar in terms of the capital markets through the increasing interest, and we're working on a couple now, of SPACs, the special purpose acquisition companies that are actually going in through the capital markets as listed instruments to get very focused access to sectoral and geographic opportunities. And we're seeing that in banking, we're seeing that in renewable energy, we're seeing that in other infrastructure subclasses. And there's also the view in terms of, and I know you want to move on just slightly, but I think just to Ed's point, I think the way that we classify the institutional investors and their appetites is really important, because we're seeing a lot of co-investment strategies through small investments into private equity to get a foothold, to get access to genuine co-investment opportunities on the ground. And lastly, early stage capital for infrastructure, typically being the preserve of development finance institutions and or governments who provide, as the ministers have pointed out earlier, their own finance to do technical assistance. We're now seeing construction companies, civil and consulting engineering companies put aside, say, little pots of $30 to $50 million to actually provide early stage equity or developer loans so that they can participate in the same projects down the line. And private equity companies are also exacerbating that model by actually acquiring developers now. So there's new forms and new models of actually being able to invest in some of the more riskier, earlier stage types of opportunities on the continent.
Hubert.
Well, I think there are 2 things I'd like to touch on in closing. I mean, we know about 2.5, this is the projected number, $2.5 trillion is going to be required each year to pursue the Sustainable Development Goals. And a large part of that, for a significant portion, is going to be Africa related. So we need to think much, much bigger if we're going to be serious about really trying to make a dent in development on the continent. And it's probably the types of instruments that can access those larger pools of capital, recognize how best to access the domestic pools, the pension and the sovereign wealth fund capital is going to be critical. But ultimately, these institutional investors that can actually help get us to that point, in partnership with all the other key stakeholders and players, are ultimately going to need to be able to allocate to institutions that are transparent, that they can trust, that the governance is in place. So a pension fund will allocate to an asset manager, fund manager, and we really need to think about how to create almost like a Power Africa scale, an Africa 50 scale, a global infrastructure facility scale approach to risk in Africa, because we lose more money each year by not properly addressing and quantifying the risk that's lost than any other sector that we seem to be focusing on. I think that's where we need to focus.
Doing business in Africa, you can't afford to be without Africa Investor.